Assalamualaikum warahmatullahi wabarakatuh.
Alaikum salam wa rahmatullah.
Shall we start now?
Okay.
Okay, we start first. I think it's have you go to Kalam actually?
Today I'm
Can you
trying.
access Kalam? Because I put all the yesterday video also. I linked to Kalam and as well as the slide also lah. So for today also for today I think that we have to cover two topics, topic 4 and topic 5. By the way, we have to.
Excuse me, doctor, not courses in Kalam until now.
Yeah. So you managed to access Kalam now, is it?
Not course, yes, until now, no courses.
Oh, no courses.
Yes. I think the
I will
screenshot.
also let me inform. Okay, I did inform the coordinator also, but somehow you as a student also you can raise the same concerns, huh? So at least you're someone who's looked into this matter. Okay, just now. Okay, this is the chapter 3. We have to complete this one. Just to recap back what we already learned from previous chapters. So in summary, this is the type of cost classifications. So they have in terms of these financial reporting, product versus in terms of period. Predicting cost behavior, either you should know either it's a fixed or variable or mixed, and assigning cost to cost objective, either direct is indirect, making business decision, differential sums and opportunity cost. So this is some things that in order for you to understand the classifications, in order for you to make the decisions. Okay, now we go to the cost of good manufacturers. Okay, if you look into these statements, schedule of good manufacturers. So this is the for the period ended December 31st, 2007. Just just a period. I think it's just examples. So if you see this cost of good manufacturers, and what you can see actually is the first, you need to identify, you need to find out, you need to calculate the cost of direct material use. So if you look into the direct material use, in order for you to find out the cost of good manufacturers, you need to know that how much the direct material in terms of the stocks, right? Either there is a stock or they don't have a stock. So based on this example, at the beginning of inventory on the 1st January, there is a stock, which is the value is 11,000. And then the purchase actually is in current year, which is 73,000. In any for this statement, for the year ended December, which means it shows that this is the 31st December, which is for period for 1 years. Just to show you, this is the 1 year period. So the purchase is done within the period of 2007. And then the beginning essentially is at the end of 31st December 2006. And then they carry to January 1. And the cost, this is the opening and the purchases actually is the total cost of direct material available for use. So they have it for use. But end of the years, the stock of material is still there's still balance, which is if the balance of the stock material which is not used. So now we need to find the cost of goods sold, manufacturer. So which means that this material is not being used. And then we need to deduct less. We need to less with the 8,000s. And then this is the total of the direct material use, which is 76,000. So you need to add, you need to plus the current, but you need to minus the balance sheet. So where his 8,000 goes, they will locate it at the balance sheet, or we can say that financial position at the current asset stock, which is we have a stock for material. So because in the balance sheet, you should know that in the financial position, we have a asset, net asset, liabilities, and capitals, equities. So which is this asset actually is we consider like our stock actually is considered like current asset, which is can be liquidate. It's a good things that we have the stocks. And then direct labels. Okay, direct labels. Here is 9,000. Manufacturing overhead. So in the manufacturing overhead, we need to accumulate the three product costs for the current year. For instance, like you need to identify indirect label, supply, heat, light, and power, depreciation in terms of plant building, depreciation of plant equipment, and miscellaneous. So if we identify as a depreciation, so we need to mention depreciation for what? When we see here, it shows that, okay, this is depreciation for plant building. It means that every years, uh, 2,000 will be depreciated for the plant building. And the plant equipment, 3,000 every years. So the plant building, actually, normally it can be last for 10 or 20 years. The value. It could be 30 years, plant building. And then why there is a significant amount, 2,000, it shows that normally if the depreciation is maybe for 30 years, so it could be, or 10 years, it could be less than 10%, less than the percent of the totals of the asset. Whereby the plant equipment is about 3,000, maybe the value of the equipment is not that expensive on the building. So normally the plant equipment goes for 20% to 30%. But plant building can be less than 5%. But the value is very high. But the depreciation is there. So we cannot say that, especially in terms of the land, sometimes land actually is appreciated, but we need to know the land status. Either is a leasehold or freehold lands. So that can bring a value in terms of numbers, how it depreciates. Even there is a numbers of depreciation like land itself. Why it should have a depreciate? Because the land actually appreciate at certain amounts. Because in business, some properties will require maintenance of what, unlike land, building, and so forth. Especially building lah. So there is a number of appreciations that need to be considered. So the value become, but it's taking time that it can goes to zero. But even the value is zero, let's say you have a building, but after 20 years, the value becomes zero already. Yeah? Normally we put $1. It doesn't mean that that is the actual, properties. So that's why in this uh, International Financial Reporting Standard, what you need to do is to do a revaluations. So you have to do a revaluations in order to increase the value, the actual value of your properties. And then when you do the revaluation, there is the profit on the equipment. So this is how to understand about the plan additional the plan the assets. But here actually is the depreciation, which is somehow you need to absorb all these costs that we pay for the building to the product. So that's why they absorb all the cost manufacturing will be absorbed, so they will identify how much they cost for those items. And then after you plus with the manufacturing overhead, you can get the total manufacturing overhead. So manufacturing cost incurred during 2007. So the adjustment of current period manufacturing cost to account for unit actually uh, completed by look into this uh, taking care of certain adjustments. So this is one of the examples that how we want to calculate the cost of good manufacturing. So if you look into this, the beginning of the direct material inventory, for instance, and add direct material purchase, less adding direct material inventory. So this is the direct material used in the production. So all these will be accumulated in the beginning of the years. So this is the very common how how to calculate your cost of good manufacturing, or is the same to calculate your cost of good sold from one to another. And this is because you need to know in terms of either you are calculating the direct material used in the production, or you calculating in total production cost, or you calculating the cost of good manufacturers, the finished product, and then the cost of goods sold. The cost of goods sold, which means that this is the cost that ready to be sold, whereby the cost of good manufacturing is the finished good product. The process has not yet been done, but it's already in the process at the inventory levels. Um, but the cost of goods sold actually is exactly, actually, this is the cost that you need to consider when you want to do some pricing in terms of the cost. So that can be considered to make a decisions. Okay, so this is the terms and the concept of the cost. So cost actually is the expenditure incurred for producing good or services. Cost object, any items or activity that separate measurement of a cost can be traced. Cost unit, quantitative unit of output or services to which cost can be related. So direct cost directly identify the cost object, and indirect cost that cannot be directly identified to cost object, convention costs, or costs that are needed to convert raw material into finished good, and job costing a specific costing system, process costing, continuous order costing system. This is just a few costing terms that you should familiar with. Okay, and this is additional on top of that. We have a product cost. So all costs that are assigned to inventory or finished good, period costs, all expired costs that are not required for productions, raw materials, material that can be physically and conventionally traced to the product, work in process, which is inventory that has been partially converted through the production process, but for which additional work must be done before it can be transported out to the manufacturing area and recorded as finished good inventory. Finished good, whereby the good that have been completed in the manufacturing process but have not yet been sold or distributed to the end user, whereby the sum cost, cost that cannot be recovered, even if it's operating under optimum capacity, whereby the opportunity cost benefit which a business should forego or sacrifice in order if you have a decision to make, and then you are in the situation whereby you need to choose only once, only once out of maybe another options, then you need to forego. So this is the opportunity cost. Okay, so how much the cost for this item? So it depends on how much the total cost of this. So this is the few ingredients in order to make a sandwich. Okay, so if you look into this example, the direct materials for the bread is maybe 315. So this is and then the total cost of the egg, mayonnaise, cheese, and leches. So all these costs need to be calculated in cost per unit. Huh? So if you want to because if you calculate based on total cost, actually is not give you the right numbers in order for you to decide how much that you need to sell, because you cannot suddenly takes the total figures instead of you only want selling sandwich about $5 can. But you see, you are buying the egg only 650. So how can you can get the profit with selling by $5 can? So this is why you need to convert all the value into unit. So when you want to calculate in terms of costing for all manufacturing, for all products, you need to calculate by unit. That is the rules. So that is the same with the question. If the question gives you in value, then you have to convert in unit. Because and then if you want to know how much that you can, your cost, you need to time by the production, how much you want to produce. So let's say here, like the cost per unit is 2 ringgit 34 cents. Okay, the cost unit is 2 ringgit 34 cents. So by means that if you want to produce 100, which is it equivalent to 234, which is that is the cost of producing 100. That's why the number of cost per unit is very important. But sometimes people say that, okay, I cannot calculate for one pieces of meal, for instance, or pin is too small. It could be equivalent to 0.0001. So that is the way you need to calculate by unit is depending on how much your product can be sold to customer in unit. Let's say customer don't buy a nail for or pin for one pin. They don't buy for one pin, but they only the market selling actually is only for maybe 100 or maybe 10 pin per pack. So you need to convert impacts, which is impact that is a 5 pin inside in one pack, for instance. So that is your become per unit. So it same goes to nature of business whereby you do the one-off project, which is all the costs will be done in one occasions. You do not selling and keep selling again, like event, for instance. You can consider cost per unit is a cost per event because all the costs will be lump sum to one event. But in the manufacturing, normally we keep producing at the full capacity. So you need to identify how much per unit or how much per gram or how much per what is the lowest volume that you sell to the customer. So which means that if you want to buy the chemicals, the minimum amount that you need to buy is maybe in one chemical can be sold in 1 drum. Maybe in 1 drum, maybe in one box. So your box per pieces, minimum pieces, it become your unit price. You don't need to, or you can convert to liter. Maybe the minimum requirement for customer to buy your product is 1 liter. So you need to find out the cost you need per liter. That is the minimum. If you say that, okay, my company only sell a minimum minimum is you have to buy 50 liters. Minimum. That is the minimum. We cannot sell it lower than that. And because the bottle is fit for 5 liters, then your cost per unit is for 5 liters. So this is how you identify, because it's easy for you to make decision, and then to see your cost of good manufacturing, to see your cost of good. So like this sandwich, you see every single items, people don't buy egg in one piece, one egg. People don't buy in latitude, in small latitude. Maybe mayonnaise, people don't buy in only for, you know, same goes to slide and so forth. They buy in batch in batches. So this amount need to be converted in quantity to get the unit price. So unit price, so you need to time with this quantity that we use for making sandwich. So if you see there is items which is direct material, direct labor, direct expenses. It's a very, very straightforward. In question, when they ask you to calculate all those, it's very easy questions. So just pick up. But the thing is that if you look into the overhead costs, overhead costs are a bit tricky part, because you need to look into the cost driver of this, either what is the indicative of charging your to absorb the electricity in the production cost. So for instance, like overhead costs, the cost that you need to pay is every day is 2 ringgit of doing sandwich, because you using this electricity. So the cost after you calculated that, you can get 2 ringgit, and then equivalent to pricing, you divide it with the how many days you're making sandwich. So it becomes 0.0014, and then you time by 5, because you are making this one. So you got the 0.1, so the quantity that will be applied. So you need to convert at the minimum, okay, how much per day, so per period, so how many hours it can be done. So sometimes in order for you to calculate the overhead, we follow the direct labor hours. Right? So every direct labor hour will be used in order to calculate the electricity. Even if they don't mention, you should refer to labor hours, because when we work, which means everything is on. uh, when we don't have to work, then everything is off lah. So which is the cost electricity is not there. But in China, they also have like they call that they call that warehouse, or that the manufacturing is a company. They don't use the electricity, the light. They work in the dark. Why they work in the dark? Because everything is computerized. So the computer did not need to use the light to see. It did not use the humans. So they work on that, which is they can reduce the electricity. Instead of electricity only can be used um for machine to move machine only, no need to use for electricity and so forth. No need to have like a conditioner and so forth. Just as ventilation, just to make sure the product is not broken. Okay, so there is a how to calculate all those things. So it's very important to convert in unit in order to get the price. So this is the first rule to get, because if you don't know how cost per unit, then it's very difficult for you to identify its current market. Because sometimes people sold because of based on the market pricing. They see the market, okay, this item normally sandwich been normally in market, their per service they only sell for 2 ringgit. Then you also follow the market. You selling at 2 ringgit. And you know what happened then later on? Actually, you are creating liabilities. And then you're supposed to sell at the 2.34, because 2.34 is the your break even, which is you don't have you know like the either loss or profit. Yeah? It's a zero. So two at the 2-3%. But when you sold at $2, you lost about 34 cents, 34 cents per item. Can you imagine if you keep continuing produce, sell, you are actually working out of nothing, not get, and you are creating liability. You thought you are selling, you are a good seller for sandwich. Everyone every day finish sandwich on top, and then you get cash on it. But somehow you have a cost, you have the loan, maybe you cannot settle because you don't have access. You actually is using um your production cost. You're using because you are not getting any profit. End up you will create the, the liability. This is what happened most in SME company, a small company, because they thought that they need to follow market. And then when they feels that the product is sold out, then his state is good. But actually it's not. You need to identify how much the right numbers of selling are your product to the market. You need to decide based on the unit cost. If you find out that you cannot, let's say the market selling 2 ringgit, but your cost is 234, then you have to sell more than 234, which is let's say you're selling about 250, which is not at the market price. What it mean? It means that if the production with the same production, so you cannot selling to you having a problem, which is the demand is not there, which is actually this business is not for you because people can get better cost. So what you need to do is that to find the product, to find the ingredient more cheaper, which means you reduce the cost. Either you reduce the cost or you increase the sale, which is people will not buy because it's above the market price. You might can sell the same price, but you need to reduce your production cost. You keep reducing production cost in order to compete with the market, with the same pricing with the market. So this is what organization, this is a company must know. Regardless any business, right? Your chemical industry, your industry, you need to know actually how much the product being used. And then overhead actually is something that you are not counted at the first place. If you look into here, I think the item, there is another item that need to be considered is your labels. Your label, they consider your direct label hours is 1 hour. So your label, this shows that this company is owned by you, done by you. So which means there is no management in terms of who is taking care of the management job. So you just consider like your direct labor hour is come from you. So this is your salary. You are out of total cost of your salary one, you get 67 cents. 67 cents, which is if you want to achieve the break-even point. So now later on we will cover break-even point after this. Then you need to know how much I should share for getting break-even point. This one is the if you sell, let's say if you produce 5 pieces, this is the how many pieces you can produce based on the management capacity. So if I look into here, your slice quantity, 20 quantities. You're using 2 only out of 2. Maybe you have 18, 20. So you need to calculate based on totals of quality, and then you can know how much minimum requirement that you need to, because you have a fixed cost, can. So because this example did not show the fixed cost, but the fixed cost actually is the minimum amount that you need to cover, in terms of the variable, which is maybe you need to sell at least about 20 sandwich, then you can break even. Break even in which is you are neither loss or profit. Okay, so that is about the chapter 3. So any question?
It's okay.
Yeah, you have anything to ask?
No, okay.
Okay.
I proceed. So shall we proceed with the chapter 4?
Yes.
Okay, can you see this one?
Yes.
Okay, so this is the chapter 4. Okay, after we calculate those costs per unit, definitely we want to know either how much should we produce. So this is the cost volume profit relationship, and then is a CVP or cost value profit we know as CVP. So you should know your cost value profit, how much you need to sell in order to get profits. So the learning outcome of this topic is you should be understand what is the cost volume profit analysis, and you should know the break-even point approach in CVP analysis. So the break-even point actually the point whereby you either lost or you are neither gain. So it's just a 0, 0, which is you need to, if you produce less than the break-even, then you lost. If you produce more than break-even point, then you profit. So you need to identify your break-even points. Okay, so the cost value profit, also known as the break-even analysis. So it's a useful technique or tool used to analyze the impact of changes in volume of your cost, revenue, or profits. So it is important for the company planning process to predict how their decision will affect sales, cost, and net income. So you should know in order for you to get profit. So you need to plan either how much income that you are expected to, because your KPI is normally measure you have a target on your KPI, which is you need to achieve certain level of sales. Let's say this next year you need to achieve 5 million sales. So based on the 5 million sales, you have to work on the productions. How much that I need to produce in order to get 5 millions. So this is the where forecasting, budgeting is worked on. And then you need to, if you don't, if you don't, if you don't have a target on sales, then your budget is nowhere, because you need to put some what we call say target, either sales, either normally we put on sales, target sales, or certain achievement that you want to achieve. So you need to put all this criteria and then you can do your budget. So the importance of the company planning in order to the budget, we look into your effect, your cost as well, and net income. how much you're targeting or getting net income. Normally based on the margin. Let's say, okay, based on sales, I want to sell at 5 million. Based on cost, I cannot spend more than 3 million because that is the limit of my cash. And then I want profit margin about 40% out of that. So you are set the target, and then from that target, you can generate actually in order to produce 5 millions, which the lower cost, the lower budget that you are estimating. So how should I can spend? So with that criteria, that's why when the CEO set up the target, because the KPI is come from the CEO itself lah, and how CEO promised to the board of the directors. So they will in fact our job as the employees. Yeah? You need to know that. So the starting point at the head of company or CEO, they say this is what they promised to the management, to the board of the director, to the shareholder, that I want to make sales 5 millions this year. And then what you do, that's why the budget it come through few process, which is there is a budget defense. They call for meeting. Okay, our boss, our CEO targeted 5 millions sales. Then what we should do? So maybe, okay, all the marketing department set up, okay, if you want to produce this one, I need to find the market. You need to build, in order to achieve this one, our capacity, the full capacity of the production only can sales at 2 millions only, or maybe 3 millions. So another 2 million, what happened? So that's why, okay, why not we increase our manufacturing, second manufacturing, to cover another 2,000. So we need that money. So, but yeah, but we only have only for 3 millions to our cost cannot be covered to to operate a new manufacturing. So that is why the accountants come in place, whereby, okay, if you want how much of cost, then we look into what the sources of the income that we should come from. Either if you public listed company, it should be come from the shareholders. So if you want to apply for bank loan, then this you need to support with all this planning, all this agreement, and you can prove that you have a demand, because you cannot simply produce without demands. Customer never requests, but you keep producing. So at that capacity, bank won't give you any funding, because it's a very risky that your operation is failed, your production is okay, but the sales you cannot sold, your product cannot be sold, no demand, and then you are suffering of that. So this is how importance to look into the sales, to look into the cost and the net income as well. So the CVP analysis is to estimate how profit are affected by the following factors, which is selling price, sales volume, unique variable cost, and total fixed cost. Okay. This is the CVP analysis model. So if you look into this, you can find out that the activities, that is the break-even point. Break-even point, you see, we already studied about the fixed asset, kan? So let's say fixed asset 10,000. So the flat rate 10,000, regardless how much the production is produced. And then so you have a total revenue, total variables, total revenue. It could be started from zero and then increasing, and then it will impact certain level of your total cost and fixed cost. And then you have the blue line. about the total cost. So the total cost actually is started from the fixed cost plus variable cost. So fixed cost is at the value maybe 10K, 10,000. So that is the starting point of total values. And then it will increase up depending on how much the variance additional cost needed to manufacturing product. So this is the when the total cost cross the total revenue, that is what we call the break-even point. So below the break-even point, we consider as a loss. But more than break-even, when the volume being introduced at the break-even point, and then you can gain profit. So the break-even point here, in between X to Y, let's say, so they are in between here. Maybe the cost, the total of production here, instead of maybe 100 here, you can get break-even point. So if you produce less than 100, then you lost. You cannot cover the total cost and certain amount of variables. But when you can produce at 101, you start getting profits. So that's why in China there is a mass productions because they want to reduce the price to the lower levels. So that's why they are very successful in terms of producing a lot of mass productions. But the problem is how to sell them. So because they know that it's very difficult to sell items in to outside, what they did is that try to get the very lowest of unit price, unit cost per unit, and then you sell a very cheap price to all over the world so that people is look into because people will look into the selling price. So how much you sell to the traders, so they can sell to others as well. So the margin of very active in terms of trading productions. So there is a business whereby the trading actually is just a sell and buy just because of the commission and because of the different internal pricing. Okay, so the assumption, somehow in order for you to do the break-even point, you need to have assumptions. You cannot, because something that will not happen, again, it not happen yet, not happen, you cannot come up with a simple number which is, okay, I want to do this, I want to do that. Yes, you can come up with a certain value, then you have to work on that value. So you want for the assumptions that from here that the revenue is linear, the manufacturing firm operate within the relevant range, the efficiency and productivity are to be unchanged. If there are multiple productions, the level proportion of the different productions sold are constant, costs are linear, fixed costs are constant, the entire relevant range and variable costs are constant price per unit. The selling price is constant. The price of product or services will not change as the value changes. In manufacturing company, inventory do not change. Unit produced and or unit sold. So this assumption of CVP analysis actually is not really accurate in terms of getting the right figures, but somehow it will close. This is the forecast which is close to accurate figures lah, but still not accurate because this is not the actual. But they are look into these assumptions because if you change the assumption, you might not get the good result lah. So this is assumption of CVP analysis. Okay, so the limitation of CVP analysis. What is the limitations? Actually, the CVP assumption rule out fluctuations in revenue or costs that might be caused by the common business factors such as suppliers, volume discounts, and special customer discount and learning curve. So this is the based on the assumption. So when you cannot come up with the assumptions, they cannot give you um, actually the accuracy of your CVP analysis is based on certain assumptions. And some assumptions cannot be applied to the CVP. So difficult to another limitation is difficult to distinguish cost exactly into either a variable or fixed cost because costs behave in a mixed manner. So in logic, because most of the time we different natures of business, they have a different cost line, the different natures of the cost. So then they are not to differentiate between variable and fixed cost is a big difficult unless you have your own specific assumptions. So because if you don't put the right value for fixed cost, so your CVP analysis cannot be right. Your break-even point actually is not located at the right amount. So that's why you need to split out because most of the costs actually they are even the fixed costs also they are nature to be sometimes to be a variable mix. So you need to mix up. You cannot choose which one is higher, which one is not. You need to split the cost either is a fixed or is uh, either it's fixed or it's a variables. And then the third one's the limitation is difficult to ensure that all product manufacturer will sold since the forecast demand may not be accurate and competition can affect the sales value. Right? And then also arising from the uncertainty, it can lead to the violations of the assumptions that the selling price and variable cost per unit is constant and that the total amount of feed cost remain constant. And last but not least, the limitations of the CVP analysis in practice. It is not always feasible to resolve all costs into their fixed and variable element, but somehow it's still a good in terms of you, in order for you to prepare budget, you need to know your cost per unit. Regardless, you are in the service industry, same also, even not only in the manufacturing, in the service or also industry. In mostly in the hotel also, they know the price per occupation, and then the price of food. They need to know, especially when they open a restaurants. If they are selling breakfast in buffet, they need to know how much cost per day of selling buffet. I think so that they can find out the cost per unit for one person at least to pay for the breakfast. Uh, for the breakfast in the hotel. So if you familiar with the Pizza Hut, actually is Pizza Hut have a very good chronology case study, which is uh they they are they are in the process whereby they have a full circles of financial circle, finance circle, which is in terms of the delivery costs, in terms of the how they're preparing pizza and so forth, how they are calculating all these costs per unit. Because if you would, I'm not sure, maybe no lah, maybe in industry like Pizza Hut so far. Every day the manager will calculate the cost per day of using in terms of the electricity. So they record the electricity, they record water bills in order to make sure actually the cost of operating for that particular day actually by unit they are not lost because they need to calculate those things. Even the electricity or to calculate water bill also they are recorded. They see the meter. So how much they use this one, how much they use for they check at the starting point from the last month or from the yesterday. So they put on the meter, and then at the end of the closing period, so they see the meter either how many reach, and then later on they calculated in terms per unit. So they know the cost of per unit being right. Either they work in a loss capacity for the particular day because they are producing certain numbers of production. So they time the production numbers so they can get actually, oh, we are losing at that today, or maybe we profit based on the analysis that come out. So this is something that we should know that regardless, as long as it involves dollar and cent, you need to calculate it. So you need to calculate those. Okay, so okay, and then selling, this is another limitation of CVP LLC also. Selling price may be reduced to achieve greater volume of trade. Okay, so this is the theory. So volume through importing is not the only factors affecting cost. Factors such as efficiency, productivity, world governance regulation, etc. also affect the cost. When what happen, the pricing is increasing. So variable cost per unit is assumed to be constant. However, variable cost may fall as volume increases and trade discount or economic or large scale for achieve and will then raise with the demand for the resources as seek supply. And last but not least, fixed cost is fixed only within a given time span and over a given range of activity called the reliable range. Fixed cost may change from budget year to or from the budget year or when the activity level change to greatly. Yeah. So this is a few limitations. So if the question asks the what is the limitation of CVP, you have any problem to answer or not? Surely not. Okay. So this is method of determining the break-even point. So now that's why it's very important to calculate those costs on unit production, your manufacturing production per unit in order for you to calculate all these things. Okay, let's say uh, the break-even point, okay, they have a three method that can be applied, which is by the way, we understand first so what actually is the break-even point. So the volume of activity where the organization revenue and expenses are required, or no profit or no loss. At the break-even point, profit is zero. So this is the something that you should really know what actually is about the break-even point. Okay, so there is a three method of determining the break-even point for a single product. So you cannot do a break-even point for many products. You have to do an individually. That's why you need to calculate by per unit for that particular product. Not all product. If you mix up the product, it's very difficult to calculate. So that's why they need to split up first. So you need to absorb accordingly, and then you can get the right numbers to analyze. So the first method we call the mathematical equation method. The second is contribution margin method and graphical method. So let we understand about the mathematical equation methods. Okay. So in the mathematical equation method, you just memorize the formulas. So you know that says minus the variable cost minus the fixed cost equal to profits. This is the clear cut. So in order to get the numbers of sales price, you need to time by the number of units, the number of unit produced. So this is good. This is okay. This is the something that either you can in order for you to get the sales price, you need to calculate the unit sales price time by the numbers of units. But in order for you to get the unit numbers of price, you need to get the total cost first. So that you know that this is the minimum amount that you should share in order to get profit. And then this one is unique variables. So unique variable, you need to time the numbers of the units, and then you can get the changes. Fixed cost is very clear cut, so cost like unchanged. So any information giving, just add-ons. So you must remember that at break-even point profit is zero. Okay, so in using the mathematical equation models, can you solve this problem? Right? I think it's clear cut. So this is the formulas.
Mhm.
Okay, this is the formulas.
Mhm.
So this is the questions. So now, can you calculate the break-even point in units and break-even point in sales volume?
Mhm.
So I give you 5 minutes to look into this. I think you already have the slide kan if you want to see the levers, but I just open this one. You can refer to this chapter 4 if you want to.
No, four we
uh,
don't have four. Don't have
Sorry,
four. Four don't have four. We don't have only
so
one,
you
two,
don't have
three.
or you
Yes.
don't have 1, 2, 3. So I copy this one first, huh? Okay, so I put it in your the group. Remember? Okay, now you have to solve this. It's a very in learning accounting or any calculations. It's very important that even you look very simple, but you need to try to calculate because this is common. People thought when they heard something that, oh, I understand, oh, very easy, I can do this. But during the test, actually they become like how to start. So that's why either when you start learning mathematics or something about calculation, uh, try to do even it's a simple because at least you know how to start.
Answer 41.65. No, no, sorry, this point. No, no, sorry, no.
Yes.
No, 1 minute. I think this variable cost, I think 10, but this point 75.
Actually, you can if you want to put the answer, don't put in the WhatsApp. You can put in here.
What?
In you see the chat room, the chat, you can put the answer from chat on the top. On the top of this Microsoft thing, there is a chat, so I can certainly see. Yes, I can see the numbers. But if you mention if you put the remarks in WhatsApp, I need to open the WhatsApp, see my telephone ID inside. So okay, you just come up with numbers 6.75
No, 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 this
testing
18 point,
units.
No, this 18.78, I think, 75.
Actually, this is the question asks you to get in units, how much break-even unit that you need to produce, because the normal sales is 45,000, and then the break-even point is the sales values. Sales value, how much is the selling price? You need to time with the normal sales. You need to time the production sales. Then you get the two. Okay, so you need and then uh, in order to answer the question, sometimes don't put on the figures. You should put also it either is a ringgit Malaysia, or either is per unit, or either in unit. But this question asks you not in per unit, and they ask you to unit. So what is the break-even point in unit? And then what is the break-even point in sales value? So they don't ask the question about what is the even point in per unit. They ask you about the unit. So it shows that they're asking you in terms of how many unit that I need to produce, not in terms of per unit. Same goes to the break-even point in sales value. They don't ask you about uh, for one unit of sales value or per sales value. They ask you about the sales value, which means how much the sales value. So the answer it should not be like 1875, something like that. It should be 100. It should be maybe 100, maybe thousands for units. Let's say 5 units, 5,000 units. Sales value could be 15, 10,000 ringgit. So try to understand the questions. Actually, they are referring to what? So I leave it first, and then you. Uh, you just take break about 5 minutes. I need to go to toilet. Then hopefully you manage to get answer. Okay, after.
I think this answer not from this slide, doctor. Huh?
Yeah, sorry.
The answer you can use the first slide or no. It's different about this. I think
Uh,
you
I'm
use
wait. I give you different slide.
because this slide you can use this in this question. I think.
Uh, the following is information from Aurora Limited. Is it?
Mhm.
Aurora Limited. Did I give you difference from Aurora? I think the same questions. So the question asks you to calculate the break-even point in units, break-even point in sales units. So be careful in terms of the question. Sometimes they ask you per unit,
Yeah.
sometimes they ask you in unit. So the different questions. So but this question asks you in unit. So the figure could be numbers. How many break-even instead of your sales 45, it could be in between, maybe 20,000, maybe 30,000, maybe 10,000, or something like that. Because they ask you a break-even point in units. And then the sales also goes to the same. So your cost actually is you need to calculate the cost price per unit time is how much your production, because they ask about value. They ask when they mention about the value, which means they ask about the total values of the sales, not per unit. Because they already given your selling price per unit. You already have. Maybe later on the question you don't have per unit, then you need to find per unit. But now the question already given you per unit. That's why you need to find out per unit first. And that is easy to calculate. Okay. Okay, I leave it to you first to get answer. So by 10:15, and we see how much you can come up your answers, and then I can explain. Huh? Okay.
Okay.
Okay, have you got any numbers for units for break-even point in units? Okay. Any of you get any number for break-even points?
No, I can't because of.
Okay. So if you want to solve this problem, number A, we need to calculate selling price. Oh, very difficult to use mouse. Selling price. The formula is selling price. Uh, you minus with this variable cost, then you got the contribution margin per unit. Margin per unit. So if you see the formula, see here, you need to get this contribution margin per unit in order to get the break-even points. So from this, you get 0.150 minus 75, 0.75. Okay.
Doctor, you're writing in a slide or where? We don't.
Huh?
You write.
You don't see my writing?
No, no, no.
Huh?
No, we don't see.
On the screen, you cannot see my writing. Eh?
No, only that. No.
Okay. I thought you see my writing on the screen. Okay, should be fine. Okay, can I write something in the chat? Is it okay? Okay, break-even point. First, you need to know about the formula for break-even point, yeah? So break-even point is in order to get break-even point per units. So I put in here, formula in units. So the formula is fixed cost divided by the contribution margin per unit. Okay, this is the formula. Break-even point units, the fixed cost need to divide by the contribution margin per unit. And why fixed cost? Because the cost that we shall, if you look into this graph, the minimum cost that we need to okay, so this one. So you see, why the formula is break-even is the fixed cost. You see the fixed cost, this is the fixed cost statement again. So the fixed cost, you need to divide by the contribution margin per unit. So what is the contribution margin per unit? So the contribution margin per unit actually is contribution margin unit equals to, how to calculate this? CMU equals to um, selling price minus dengan variable cost. Okay, this is formulas. CMU, SVVC. Okay, so how much the CMU? CMU equals to 1.50 minus 0.75 equals to RM 0.75. So what is how much the fixed cost? Fixed cost is that?
Doctor, this equation in a slide or no?
Sorry?
This equation about about even point.
Yeah,
We have
break-even
in a
point.
slide. We have in a slide here.
Okay. Yes.
Mhm.
So we need to solve this. Can you see anything that I move with the rate something?
You're right. I think in my chat only, not anybody can see. I think for me only it is. I see this.
Will you see that?
Mhm.
Okay. So now, in order to get the break-even point per unit, you need to divide by feed cost, 50,000, because 50,000 is the minimum amount that in order for you to make sales. And then you divide by the contributions per margin, so 0.75. Then you can get how much? How much you get? And 20,000, is it? 20,000 per unit. Okay, this one, 20,000 per unit. Okay, so the break-even point is 20,000 per unit. And then your normal sales is 45,000. In order to break even, you at least need to sell product minimum 20,000 per unit. If you cannot sell 20,000 per unit, then you are getting loss because you not even cover the feed cost. You cannot cover the feed cost. So that is mean break-even point per unit. Understand?
Sorry, doctor, we don't see anything. We don't see anything.
No, can you go to the chat room? Can you go to the chat? Meeting chat.
Yes, I
أنا
am.
بخش على المور. ادخل على المور وبعد دقة الشات.
Have you seen the message that I write on the chat?
I share what you're writing in WhatsApp now. Can you see in WhatsApp? Group WhatsApp.
Okay.
I share in WhatsApp. But I have a question about equation, even point. Is there on slides?
Oh, which means the others cannot see. You mean?
Can you see the WhatsApp? I sent the question about maybe you.
Yeah, I see at the WhatsApp. But the rest can see the WhatsApp or not? Cannot. The rest
Okay,
can see the
now.
meeting. You can see the meeting chat. You cannot see
Okay, I can see now in the meeting chat.
on the meeting chat end. Is it? So you just click the meeting chat. It will be beside you. So easy for me to write down. Is that okay?
Yes.
Okay. So now then, so you understand, huh? This is the minimum amount 20 unit in order to, to get, in order for you not to loss or gain, huh? Neither loss or gain, 20,000. It's a break-even thousand. Because if you want to produce, you minimum, at least you need to sell 20,000. If you produce 45, then you can sell only 20, then you don't get any amount of profit. But if you can sell more than 20, then that is your profit. Even you not be able to sell in the full capacity. Maybe your capacity to produce 45 units can. So you produce 45 units, but you only manage to sell 30,000. You still in profit because you are more than 20% per unit. So that is the break-even point. Understood? Huh? Are you okay? Stay follow? That is in terms of unit. Then what happened in terms of, so how much the cost in terms of pricing?
Doctor, I ask you about BEB units. Equal fixed cost. This is in a slide or the first time we see this? I think this is not a slide. This BEB units in a slide. This
in the slide.
سالم ممكن توضح لي صوتك اوضح مني. المعادله هذه موجوده في السلايد يا سالم.
Dr. Jum'a asked, is this equation available in the slides?
You mean the formulas?
DEB
No.
units.
This equations, is it available in the in this chapter 4 class slides or not?
You mean this one?
This equation now, which we are solving now.
BEB,
Yeah, this
BEB
is
units. BEB
we have
units.
in the slide. Yeah, this question we have in the slide.
Yeah. Is it available in the slide or not?
Available in the slide. This is what I show you that available in the slide. Is it? You want to see the question or the equations?
Equations about DEB. Equation about DEB units.
Break-even point units.
Yes.
Okay, this is, we have actually 3 methods on calculating the break-even point. Now I explain about the mathematical equations. Later on about the contribution margin method and graphical method. Now we only refer to the mathematical equation. So this is the mathematical equations methods. So in order to calculate all the break-even, you need to know that at the break-even profit is 0. So you need to understand this terminology, which is you minus all this, and then there is a profit. So in terms of, you mean the formula, is it? You're asking about the formula?
I asked about even point in units. From where I can take this? From this equation, the first equation, or from where? Because the first time I see even point in unit. When I need calculate about this, we have equation or no on a slide? On only one equation you send now in WhatsApp.
Okay, so that is, you mean the formula, this one? I put here. You mean these formulas?
Yes, I ask about this.
You
From
asked
where? From where
okay.
from where we can find in a slide or no? This you make this
From these formulas.
from my
Actually, there is an insight in the formulas, but wait, let's see. This one. You mean this one? I go for. You're asking about something like this?
yes, because I don't see this. Yes.
Okay.
Can you send all the chapter 4?
Okay. I will send the chapter 4 just now.
Thank you.
Yeah. So I put here in the WhatsApp, is it? You want? Okay, this is chapter 4.
Okay, now okay.
Can you see now?
Now we can calculate about this question, but before, because you sent the others. first slide in WhatsApp. You send the equation method.
Which one? The equation methods?
Yes, yes.
Okay.
When you send the question, you send the other slide, not this slide, about this question.
Okay.
Okay, now, okay.
This. So therefore, is it? Okay. Okay, so can you calculate a break even in terms of pricing? How much you get now? So I just copy here.
I
You just
think this
report
is
on message, huh?
20,
In terms of ringgit Malaysia, in terms of values.
30,000 ringgit.
Okay. Okay, I give you formulas. You have actually two formulas you can calculate. So this is one of the formula. Actually, you don't know what mean by the formulas. Formula actually is what do you understand about formulas? The equations. Anyone can explain what is the formula is all about? Formula is for what? What's the purpose of we have formulas? Anyone?
No. Maybe.
Actually, the formula is being created because we want to simplify our calculation. We want to calculate and make it easier. It doesn't mean that if you have the understanding, so the calculation can be in different way, but you get in the same answer. It doesn't matter also. So like this, I give you formula, but if you want to turn things into another way, you can get the same answer also. As long as you understand the equations, you understand the rules, which is the rule for the equation is this one. This one. Okay, this is the sales minus variable cost minus fixed cost equal to profits. So in order to get the sales, you need price, then you need unit. So this is the concept that you need to understand. And I just put the formulas. Can you solve based on the formula? How much you get for the break-even point in sales value?
How much? This 20,000 unit or what?
Because in order for you to get the contribution margin ratio, that's okay. This is the you need to get this one first. CMU, contribution margin for ratio, equivalence to this is the CMU ratio. You need to get the CMU ratio first. CMU, but the selling price. So this is the formulas. If you memorizing the formulas, because that's why if you did not really understand the concept, then you have to memorizing formulas. So this is a formula. So when you see the formula, you just put figure in the formula. Is it? But if you understand the rules, I can show to you what is another options that you have if you understand the rules. So if you want asking about the formula, so this is the formulas. Okay, can you solve based on this formula? First, you settle the CMU ratio first. You get the CMU 0.5. Can someone, can you try to solve this problem first?
Mhm.
You need to find the CMU ratio first. How much your CMU ratio now?
CMU.
CMU ratio.
Mhm.
How much?
Selling price minus selling cost, variable cost, I think.
Okay, on the
Point
this one you
0.05.
already see can. CMU is already given up. We already calculate the CMU
Already CMU
0.75.
calculate. Yes, yes, same ratio.
0.75 and divide by the selling price per unit. So how much?
50%.
50 cents, 0.5, is it?
Yes.
And then in order to get the break-even point, you need to fit cost divide by the CMU ratio. How much you get? Which means 15,000 divide by
0.5.
0.5.
Mhm.
So equivalent to how much you get in ringgit Malaysia?
7,500.
Huh?
Hmm?
Sorry, you get how much? How much break even for says fit cost divided by the CM ratio? Even though you look very simple, but try to calculate, and then in order for you to start, then let me know which one, where's the figures coming from. You can ask that question. What is the, how to take out the fees? Now, this is, can you solve this problem? Break-even point says
15.
30,000.
30,000, yes.
30,000. So the correct answer is 30,000. Okay, this is when you
It's
follow
cost
the
and sale simulator.
these 30,000.
Mhm.
Okay, so when people ask you, okay, I only can calculate when there is formulas. So most of the time you need to memorize the formula. Like we study mathematics, we memorize formula, but we did not understand why the formula is being created. If you notice that when we learned about to calculate the circle, kan, normally we use pie chart. So the pie chart formula is 3.4 plus plus plus. But we did not understand why 3.4, why not 4.4 in formula of the circle. And then we noticed that the diameter of the circle actually is 3 times in like a pizza, kan? This is you take the diameter in between, you circle that one pizza, and then you know that this is the 3 times and then 3.4 diameters. Three circle, 3 diameters, 0.4. So that is the formula come across. So you need to understand those. So same goes to here. Even if you sometimes you forgot about the formula, but you know actually what is the rules. Sometimes you can use like this formula also, not this formula. There's uh, on logics, on the sales. You time by 20,000 because you already got 20,000 in your question. You know that the break-even point is 20,000 units, can for unit, can. So you just time with 1.5, and then you get how much? 30,000.
Mhm.
You get the same answer.
Yes.
Can you see?
No, no. Where you write?
Hmm?
You writing now?
I read on the chat.
Mhm.
Can
Yes.
you open your chat?
Oh, yes, 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 yes,
Don't close your chat meeting chat. Can
yes,
you work
yes,
with
yes.
that?
GEB sales. I think the last is easier than the first.
Is it okay? You okay with this? Open the meeting chat, so it's easy for me to write.
Okay, okay. And I ask you about the last formula. Last formula. I think this better than the first.
Okay, because
Easier.
the last formula is just we need to know the break-even point for unit. Then we time by 6, then we get the answers. If you want to convert with from unit, but if you want to, let's say your question don't ask you to calculate in unit, so you don't have this figure, then you need to use this one. So it's based on information that you have. But once you understand the rules, then actually you don't have any problem to calculate the CVP. Is it okay?
Okay.
Can we move on to another method?
Okay.
Okay. So now it goes to contributions margin method. So this contribution margin method, actually a step to calculate break-even point value using the contributing margin or the contribution to the sales ratio. Actually, the same, they're using the same formula as well. So they calculate contribution sales ratio and contribution margin ratio. The contribution sales ratio is a unit contribution margin divided by the sales price per unit. But they're using the contribution to the sales ratio to calculate break-even sales point, fixed cost savings, or you can using both. So this thing actually is the technique of the contribution margin. So actually is the same with the mathematical equation. It's just almost the same. Uh, it's almost the same and based on the contribution margin. That's why if you ask me, then what is actually is the contribution margin? Actually, it's almost the same from here. Right? The fixed cost with the contribution margin. Okay, so the mathematical equations just show you these things only, but the question actually is more refers to contribution margin. Okay, so I think this
I think this we answered in the last now, DB sales.
Sorry?
It's like what we are writing now in chat, deep cells 20,000 units, items 1.5, selling price per unit. This slide. You listen me good or no? Hear me is clear or no?
Yeah, which one you are referring to?
I told you about this this slide. Like what you're writing in no this yes this what you're writing
Okay,
in
the
the
same.
chat, deep cells equal 20,000 units, items 1.5. This now number two using
Okay.
yeah.
So this is the both formulas, huh? So
Yes,
okay, can you solve this one? I think it's almost giving you the same answer. I think it's same, is it? Wait.
yes, okay, same, yes, you answer same
Oh, no
yes.
wonder. I did. There is some mistake on my slide. That's why. This one for uh uh this is where I explained in the contribution margin method. Huh?
Mhm.
Um, the formula I'm giving is for the contribution margin method, not for mathematical equations.
Mm.
I should remove this one, the slide. I think I removed to the right locations. So the method that I inform you is actually is just about this equation. So if you look into the mathematical equations, you need to look into this rule. Okay. Okay, that's my mistake to based on the equation, which is I did not give you the formula first. Is it? Okay, now we go back to this one, the mathematical equation methods. Just now, this is uh, the contribution margin method. This is the contribution margin method. This one. Same goes to this formula. This one is called contribution margin method. But the correct for mathematical equation method is you need to know about these formulas. This one. This is for mathematical equation models. Can you try to calculate based on this one, or I think the answer is there. So you know how to calculate based on the mathematical equation method or not? I just show you how to calculate. Is it okay?
Yes, we answered this, okay, I think.
Okay, because the answer is same. So what we need to find out actually how much we need to break down at the break evens. We can consider that at the break even we can consider that because we put the equation, so we can consider equation like algebra so forth. So okay, so this one at the break even profit is 0. So the sales revenue and total value plus the cost, and we consider the 0. We put the equation first. Right? Sales revenue equal total cost plus fixed cost. Um, why they copy like this? They have to one I cannot remove. Okay, at the break even, the formulation is like this. Okay, the cost plus fixed. The profit is 0. So when the profit is 0, the sales revenue equal to total variables plus fixed costs. Because the profit already 0, right? Which mean that when you change the equations, so they become like this. Sales revenue equal to total variable plus fixed costs. Because we don't have a profit. Understood that? So then what we need to do is let's say we put equation um, okay, let's just put equation here. Okay, please. Okay, let's we put like X, huh? X is the break-even equity for Unix. Okay, then and then this is the equations. So now we need to find out the value for X. Okay, so the value for X is what we're missing now is the value for X. Huh? So the rest we have the value. So the rest we have value, just put 1.5 X. Oh, confused. We're supposed to put Y because they have another X time by time. Okay, so and then we resolve this as mathematical equations like algebra. So you can you can get how much? Huh? If you solve this problem, this mathematical equations, definitely you will get X is equivalent to 20,000. Is it correct? So if you solve these problems, the mathematical equation, you get 20,000. And then how to get the sales? So as normal, once you already have a 20,000, you just time by the 1.5. 20,000. This is just simply time by 1.5, then you get 30,000. Okay. Is it okay?
I'm sorry, as not for me. I now it's all confused about this. I don't know from where. Yes.
Okay.
Can
So
we take the
then,
rest a minute? We take anything. Now I can't understand anything because about this.
okay, okay, I try to,
We start from the start. I think that we return this from the first one. We can understand, but this now.
I have to redo back, huh? Redo explanations, so that you can easily understand.
Doctor, can take a break, 5 minutes or 10 minutes.
Okay, then we take a break 5 minutes. We resume 11 o'clock, uh, 11, 3 minutes something. So then we try to look into this method. I try to explain in different way about these three methods. So uh, you need how you want to break for how
10
many
minutes. 10 minutes, 10 minutes, Doctor, 10 minutes. We need to take
about
better
10
break fast. 10 minutes.
about 10 minutes, is it?
Yes, yes, yes.
Okay, we start by 11:10.
Inshallah.
So I try to figure out how to explain much more easier on this. Okay, bye.
inshallah.
Shall we start our class? Resume.
Okay, doctor.
Good.
Yeah. Okay. Now, we resume back from the beginnings of how to calculate break-even points. We have three methods: by mathematical equation methods, and by the contribution margin method and graphical methods. By the graph, you plot the graph and then you can get the break-even point. So just now it's a bit confusing because when I explain about the mathematical equation, I give answer for the contribution margin method. So now we go back to the mathematical equation methods. So in this mathematical equation method, sales minus variable cost minus fixed cost is the profits. This is a very in accounting financial statement. All the sales minus all these expenditures, and you can get the profit. Same. So in order to get the sales price per unit times by the numbers of units, variable cost unit, variable cost time per unit. But that is the remark here, the assumptions of the break-even point, whereby profit is zero. So when the profit is zero, they become sales minus variable cost minus fixed cost equal to zero. So you only get the numbers. It's like algebra. So zero, you get the numbers. So now the question is ask you what is the break-even point. Okay. So now based on these examples, okay, we need to know about the break-even point in unit. So how to calculate based on the using mathematical equation methods. Okay, this is I summarize step by step. So using the mathematical equation methods, defines the profit equations. The basic equation is sales revenue minus total variable cost minus fixed cost equals to profits. And then the break-even point is zero. So break-even point is zero. We know that the profit is zero. The break-even point is zero. So break-even point equal to profit, the same amounts. Understood? So
Yes.
now we remove the profit. Then the equation becomes sales revenue equal to total variable divided by the fixed cost. So we change the equations. And then it's algebraic. Let's Q. I using X is a bit confusing because we time by M, we time by X, but let's Q is a break-even quantities in unit. So the formula is selling price timed by the Q, the qualities, because selling price, if you go to the equation, they say selling price timed by the unit. So you want to know how much the unit. Because we don't have the unit yet. So we want to know what is the break-even units. And then equal to variable cost times the units, and then divide by the fixed cost. Plus the fixed cost. Okay, so the insert given values, 1.5 times by 0.75 is 0.75 times by 15 thousands. And then you get the price. Okay, you time by 15,000. And then 1.5 units minus 0.75. The break-even point equal to 15,000. 0.75, 15. So the end up you can get 20,000 based on mathematical equations like algebra. So, and then in order to get the break-even point in value, just straightforward because you already have the figures. So I think Okay, so I think this is not any issue for you to understand this one again because you already have the 20,000 unit. So this is how it works. Huh? So have you understand about the mathematical equation methods? But in terms of you, in terms of if a question asks you to solve this problem, if they do, if normally they don't ask you to using what kind of method, so the best is to look into the marginal method, the second method, rather than the first method. But if you are quite familiar with these equations of mathematical equations, and there should not be any problem because now the calculator can be easily the you know the scientific calculator, you just put in this equation, then you can get the answers. Are you using a normal calculator or scientific calculators?
It's normal, no problem.
Hmm. Because if you're using the scientific, because nowadays students they have a scientific calculator, they can put all these equations very easy. So this is based on the mathematical equation method. So the second one is the contribution margin method. So this is what I already explained previously because this is using these formulas. You need to find out the contribution margin per unit. So the formula for the contribution margin per unit is the selling price per unit minus the variable cost per unit. So you need to know these rules, So in order to get those things, so this is the same also. Start to calculate the value unit contribution margin or contribution to sales ratio. And this is I think it's already explained, about okay, this is using the contribution margin, which is the formula is you need to find out the contribution margin per unit, and then when you get the contribution margin per unit, you need to divide by the CMU, fixed cost divide by the contribution margin per unit, and you can get the answer 20%, 20 units. And if this question were not given, you can go to the method two. But if you have a 20 unit as a break-even point, just convert it to just time with the 6.5 selling price that you can get the values, break-even in value. Okay, understood now?
Okay.
Okay, clearly understood. So now it goes to which one? Okay, this one. Okay, we have another method which is okay. We have another method which is graphical method. Graphical method with all this information, you just can plot out. But if you don't have enough information, which is you need to calculate first either based on mathematical equation and contribution mathematical equation in order to plot the graph. But somehow, if the information is already given, then it's easy for you to plot the graph. You're just plotting the graph, and then you can see the cost line that is considered as this one. Okay, so this is the uh, others analysis actually for CVP analysis. Your target says for required profit, your margin of safety and operating leverage. So this is a required. This is a why you should analyze your CVP analysis. Okay, this is formula for target space for required profit. Because you, as a CEO, you have your target sales. So you have a target sales, then this is then you need to calculate based on your target, based on your target sales. So this is the formula whereby you have a fixed cost plus your target profit, how much you want to achieve your profit, and then you can divide by the contribution margin per unit. So the difference between the margin margin contribution per unit approach actually is just you only have to add the target profit. The same formula been given. So target sales is the value of ringgit or dollars. To find the target sales volume in sales value, we must use the contribution sales ratio instead of contribution margin units. You have to use the contribution sales ratio, not the contributions for margin per unit. So the target sales in value, fixed cost plus target profit contribution sales ratio. And then in order to get the target sales value, you need to plug the sales premium. This one is a common one. You already have the volume, then you can use another formula. So the difference between the previous one, actually, because we want to find out the target sales profit or required profit, then we need to use this formula, which is we just add the target profit. Is it clear? Okay. Okay, now we have a margin of safety or MOS. So margin of safety indicate by how much the company decrease in sales before a loss occur. So they indicate how much the company decrease in sales before a loss occur. So there are we call that before something bad happen, we need to trigger first. So which means alarm system. It's just almost like alarm system for safety nets. Before it lost, so they are the trigger point. So it's a difference between budget sales volume and break-even volumes. Alternatively, we can express the margin of safety in terms of percentage. So they can do by the percentage as well. So if you look into the formula, margin of safety per unit, budget sales volume minus dengan break-even sales volume. And then margin of safety in terms of value, budgeted sales in value minus the break-even sales in value. And margin of safety by percentage is budget sales minus with break-even sales divided by the budgeted sales. So this is the in order to get the MOS, because you need to know, okay, after you getting back all the break-even analysis, then you need to identify your budgeted sales volume. So there is a difference. At least you need to know how much before your percentage of the safety net, because you add on the budgeted sales value. Because sometimes your value cannot be achieved, then you know that how many percent it should be done. Okay, so example, Mama Sandram Bahar makes makes a sell product Z at the price of 50 ringgit per unit. The variable cost is 40 per unit, and the budgeted fixed cost 60,000. Budget says are 8,000. So what actually is the break-even point, and what is the margin of safety? Can you solve this one first? Or I think you can refer the slide, the slide that I give to you earlier. Actually, there is a formula that you can refer with. You can try first, any numbers you can put here in the text. Like this kind of question is very difficult or easy for you to answer if the for exam.
I don't know an exam. I think difficult.
This kind of question is for you is easy or is manageable or is very difficult to solve this problem? Because this kind of question, if in the final exam, you only can carry a few marks only, yeah? And then that's why I need to see your level of knowledge also. So maybe I can come up with this kind of question, but I have to create many, yeah? Many questions, a few questions, section A, B, and C. So they're asking about your skills. Will you try to solve this one? So just put, just let me know the answer in the chat, maybe. How much the break-even point?
I think the first now we break even fixed cost 60,000 ringgit.
60,000 ringgit for what? For break-even.
This fixed cost.
Yeah, fixed cost is 60,000. Then
No, yes.
fixed cost is correct, 16,000.
Division 15 minus 14. This we needed the margin per point. Margin per point. Per point. I
Margins?
think per point. Yes, margin per point. 15 minus 14 equal this 10 ringgit.
Yeah, yes, 10 ringgit. CMU is 10 ringgit.
Yes, yes. Break even point 16,000 division the thin 6,000 units.
Okay, correct. So break-even point is 6,000 units. But the question asks you are break-even, they ask you about the break-even point, is it? So they
Yes,
did not even mentions other is value or units. Huh? If like this case questions, if they don't ask you either units or ringgit, or either you answer in unit, and the best one is you can answer in both unit and ringgit Malaysia together, like this kind of question. So if we convert to 6,000 in ringgit, so how much?
6,000 units.
Hmm?
10 units.
6,000 times by 50, is it?
Now 6,000, yes, type 50, 300,000.
300,000. So so the answer for these questions, if they don't mentions about unit and ringgit Malaysia, it's better you answer both. Huh? So break even point is 6,000 unit or 300,000 ringgit Malaysia. 6,000 unit or 300,000 ringgit Malaysia. And then what happens to margin of safety? Because now you already have the break-even in terms of units. So how to solve these problems?
And 50. Budget sales minus break-even sales, division budget sales. Budget sales.
Budget sales minus break-even in terms of unit. So how much the budget?
Budget.
Budgeted it's 8,000, correct?
Budget sales minus
8,000 minus
6,000.
6,000 become?
2,000 units.
Yeah, so the margin for safety in unit is 2,000. And then the question also did not ask you either you need to come up with the margin in terms of unit or ringgit Malaysia. It's better to give both. So which means that since you already have a 15,000, just time it up with the 2,000 times by 50, you can get 100,000, correct? And then another step that you need to know in terms of either how to get in terms of percentage, the margin in terms of percentage. So in order for you to get the percentage, 2,000, you divide by the 8,000, and then you get 0.25 or 25%. Okay, yeah?
Okay.
Okay, so I think I write down the details lah, so I think you can understand this one. Okay, so in the graphical methods, just now, okay, this is because this is the method that normally this is quite straightforward method. The chart can be used to plot and determine the break-even point for a single product and multi-products. The following type of chart are commonly used in determining the break-even point: traditional break-even chart, contribution approach break-even chart, single product profit value chart, and multiple product profit value chart. So all this chart can be plotted based on this one. So this is one of these example that you can draw this one based on the requirements and based on the information using the graph. I think is it you want to draw the graph? You have a graph. You have a graph paper with you? Don't have it. So if you have the graph paper, you can plot the graph. You can plot the graph and solve these problems. Because the answer is you don't have the graph paper. It's very difficult for you to draft those to get the correct numbers. So how you want to apply this one or not? Nani, just understanding only. You want to do or not this one? The graph.
I don't
So
know.
if you want, if you want to plot the graph, so you can show me the graph that you are plotting. But if you want to do I can do an exercise as well for this one. For today, I think you just want to understand the concept only, is it? You want to try to draw the graph? No need. But this is the third method. No need,
Yes, no need.
No need, But this is just a plotting the graph, and then you can get the result, the same result, because they come up with, but this one is different, question, so you might get different answers. Okay, so this is the graphic. This is the solutions. Plotting the graph, and then you can get the price. You can get the answer. So the answers. This one, I think you can see that one. Okay, and this is how the graphical methods. And this is instructions you can go through. You can do your own. Because I need to show all these graph being plotted. maybe it's easy by plotting with using the graph paper. Okay, then you come up with this. So based on this one, this is the answer, lah. You can get when you plot, you can get this graph, and then you can see the break-even points. So you can see here, there is a 4,000 sales in unit, and then you can get revenue at cost 6,000 here. In terms of dollars, in terms of ringgit Malaysia, 6,000. In terms of unit, 4,000. So that's answer. After you're plotting all this graph from fixed asset to thousands, and you're starting. So this is if you follow the instruction, you can get this answer. Okay, the break-even point is where the total cost line intersect the total revenue line. So at this point, the total cost is equal to the total revenue. From the chart, the break-even point is 4 units and output. At this point, both of the revenue total costs are 6,000. Okay, so you can plot all this graph. Okay, so the contributions break-even chart does not plot the fixed cost line. Instead, the variable cost line is plotted running parallels to the total cost line. Yeah? So nevertheless, the traditional break-even chart information relating to the break-even point, the margin of safety and the area of profit and loss can be obtained from the contributing approach break-even chart. So in addition to these informations, the chart also provides information regarding the amounts of total contribution earned. So we give your figures to look into this one also 1.5. Okay, these figures, graphic methods. So this is a few steps on doing this. So any questions that you want to ask with regard to these topics? Any question you want to ask about the CVP?
It's okay. It's okay.
Okay.
It's okay. We go for another chapter, chapter 4, chapter 5. We go to chapter 5.
Yes, okay. Can you share in WhatsApp, please? Chapter
We
5.
can proceed with the chapter 5. Is it okay?
Okay. It's okay, okay. But can
Okay,
share in WhatsApp.
I send the slide first, chapter 5, through WhatsApp. Okay, I already sent your slide to WhatsApp.
Yes, okay.
Yes. Okay, out of many, I think this topic is more challenging. It's okay, more challenging, not more difficult, huh? Challenge. Uh, it's more challenging compared to. Hey, why I cannot share this one? Uh, Even to open also very difficult. So this look like very challenging. I cannot open. I cannot share. What happens? Um, okay, chapter 4, chapter 5. Um, I don't know why, but why cannot share? Okay. I should be share. I tried to share, but cannot. Correct. Yes, suddenly close. I don't know why I cannot share. I try to another methods. Can you see this one?
Yes.
But not in the presented view, is it?
Your screen.
Okay, so I try to share in the presented view. But using this method, I cannot. Okay, I cannot see any message or if anything, you just WhatsApp me, yeah? Because I'm using this view different screen, so I cannot see anything. I just see the screen only. Okay. Okay, now this is considered like the more tough questions, not tough, challenging topic, which is activity-based costing. Actually, it's tool to aid decision making. So at least you understand what actually is all those costs. Now, in order for us to calculate the cost, we need to find the cost per unit. So we have a method. Uh, it's same with the previous one, except for the overhead, because the overhead need to be calculated based on the activities. Okay. So this is what we are going to finish these chapters by today. Hopefully we can cover all. Uh, but we have to do another exercise for next coming classes for these topics. So it's considered very important topic as well, and it will be tested every semester in your final exam. So the learning outcome of this topic of this chapter is to describe the allocation and apportionment of overhead costs, to understand the meaning of activity-based costings, to describe how overheads are dealt with in the activity-based costing, assigns overhead to the various cost pools, calculate the cost driver rate, companies compare the traditional approach costing for product and services with the activity-based costing approach, explain the limitation of activity-based costing. So this is what we expected you to understand about activity-based costings. Okay, so uh, in activity-based costing, because you should know that the overhead are regardless as the most difficult part of costing, as the overhead items are numerous and at times there's no one more appropriate basis or apportionments. So in accounting, in the financial accountings, the accountings need to be presented in true and fair views. So the accountings must be reflect on the real situation uh, whereby each of the costs that you are used to be applied for a certain product, for instance. So it's very difficult to, and there is no other perfect way of to identify those costs unless you keying you keying items by items in your database. There is difference, which means every single second but so you cannot get the accurate also. Because let's say, for instance, like electricity bill, you electricity bill in the office or in the warehouse, you are being paying for electricity bill, but can you know how much the electricity bill used for a particular subject, particular product? Definitely very difficult, sir. That's why we have a few methods to apply. One, absorption. The traditional one is absorption costing and marginal the absorb. You mean all this absorb costing or marginal costing? And the second one is the activity-based costing. So activity-based costing is not new. It's taking for many years, but they stay relevant until now. But in futures, we also have, not in future, but now we already have another method, but it's only applied to the certain company. There is link accountings. So they're using the link accounting to calculate those costs, but actually they apply to the link manufacturing company only. But the most common method, regardless you're small or you're a big company, your costs need to be calculated based on the activity, so that you can know actually how much your punya cost actually, how much your cost for the particular product, for single product. So that's why you need to calculate per unit. You need to find out per unit. So as you said that the theoretical assumption on some basis to apportion overhead using the various method has been accepted as reasonable and fair through just estimates. So the auditors, the financial accounting also based on the estimation, not all the even the historical data. So when they do a segregation, sometimes they're based on the uh, estimation, especially when they want to closing the stock. That's why some of the organization they can do the stock take in. Why? Because they want to know what is the last stock that available, which is need to remove out from the income statement and transfer to the balance sheet or financial position. And why they want to know the last, because they want to do an adjustment if the missing item or so forth, a different pricing. So this is the based on estimation. It's been accepted, even if not it's not a perfectly amount, but it's been accepted by the um, uh, by the accounting standards. So that is how it's been recorded. So this method, that's why if you look into the yesterday chart, then there is a connection between costing with the financial accounting. So because it really reflects the amounts of the financial accounting. So same goes to the either you use the traditional way or you use the activity-based costing, you can see the difference in terms of figures that will be transferred to the financial statements. Okay, so this method ensures that there is at least some measure toward charging the overhead various items to the product and services. If you also find out that you have a new method that can be applied and you state that it is a very and much more accurate than activity-based costing, go ahead, as long as the auditors understand and make reasonable just enough, because this is based on assumptions, on the calculations, estimations, and they are more on concern on the total cost, not on the details of the item cost. So the details of this item cost are actually needed by the management because management want to know how much the price based on the activities. Right? Okay, so what is the overhead? So this is very important. So because we just now understand about the overhead, but now we want you more and more understand what is the overhead is all about. Because if you miss this part and then you cannot differentiate which one is the overhead, which one is the direct level, direct method, direct material, direct level, and direct expenses. So overhead actually is consists of indirect materials, so material which are not traceable to product being made. For example, tools, oil and lubricants, glues, nail, cleaning material, because sometimes you need to clean all this material again. You thought, all right, this is not the product cost, but actually it is. Is it maybe you have what you buy one bottle, but you only use a small portion only. The small portion need to be calculated as well, because this is a part of the you need that because you want to produce, you want to. This is indirect to the material to make sure the material is clean. And the second one is indirect labels. So label which is not directly engaged with the production, let's say for wages paid for the foreman, factory supervisor, stockkeeper, or especially in your department, training department, it could be if your cost is indirectly related with that production, then your cost will be counted. Okay, so indirect expenses. Other than direct expenses, let's say rent and rate, heating, lighting, and depreciation. Depreciation means equipments that will be charged in the particular period, maybe a month or years, based on the equipment so forth. So depreciation will consider under indirect expenses, and then the maintenance, etc. So this is the overhead. So if you want to know, this is about the overhead, okay? And then overhead category. We have the something related with the production overhead, manufacturing overhead, factory overhead. And then also we have the administrative overhead and selling and distribution overhead. So these are three main categories, that where overhead is attached with. And then the productions overhead, manufacturing overhead, factory overhead, which is actually is a cost associated with the operating of factory. It is include all production costs other than direct material, direct labor, and direct expenses. Example, depreciation and insurance of the factory building, repair and maintenance of the plant and machine and other production facility, factory rent and rates, lighting and heating, indirect wages and indirect materials such as factory supplies, lubricants, etc., salaries, and related cost of production management. So this is the cost which is should be absorbed in your productions, in your cost of the production. And then there is a calculation need to be done in order to find out how much the cost need to be absorbed. But the traditional, they only absorb based on lump sum. But the activity, they absorb based on activities. That is what you need to remember. Okay, so the administrative overhead, it consists of costs associated with the general management of an organization. So it's not directly related to other department in the organization. Example like office rent rentals, office lightings and air conditioning, salary of office staff, depreciation, repair, maintenance, insurance of office building, office equipment, audit fees, postage, printing, telephone, legal fee. All this actually is the administrative overhead, which is you thought is nothing to do with the productions, but actually is a support, which is if you don't have this, you cannot come up with the production. So indirectly, this is very important as well. And then the cost actually is not meant for this product only, they use for other and other things. But that's why there is a way of to identify with the cost driver in order to identify how much the cost of the overhead actually is reflected in the product that you are producing. Okay, so last but not least is about the selling and distribution overhead. So all costs that are incurred to secure customer order, any cost to secure customer order, you can by telephone ke, you communicate to the customer just to make sure they are related with the customer, and then selling overhead. Some commission, traveling expenses of salesman, expenses related to the showroom, advertisement and public expenses, cost for catalog and price listing. The selling and distribution actually is the huge amount. But it's not only selling for a particular product, and they're selling for all products. So that's why there is a portion whereby you need to take out all this total product from the selling overhead to the portion of individuals. Okay, so individual products. So the distribution overhead include the expenses of warehouse, carrying rate, track onward, depreciation, insurance, repair, maintenance, and distribution vehicles. So it will consider as well. So I hope you understand about what actually overhead. When you come across, if you still cannot remember, just remember your salary. So my salary, your salary is as a support staff, actually is belong to the administrative overhead, something like that. But sometimes if you work in the marketing, your salary, you can gain commission, so you're under sales and distribution overhead. Actually, by paying your commission, it doesn't impact on the productions of the product. But indirectly, yes, that is something that you need to, which means when you pay the commission, actually you reduce your revenue and you increase your expenses. So these expenses or a portion to your product need to be deducted. Okay, so that is the allocation and apportionment of overheads. Okay, the allocations of the whole items to allocation overhead according to CIMA, the allotments of the whole item of cost to cost center or cost unit. So example, indirect material used only in Department A are allocated to Department A. The simplest allocation of overhead is the based on direct labor hour, machine hour, and cost of raw material. So this is the direct allocated overhead, which is direct to the particular expenses. Then allocation methods, you have two allocation methods, which is direct method and step down method. So direct method, overhead are charged directly with the amount assigned to the particular department only. Yeah. So if you use the direct method, then it's the allocation much more easier. Actually, in futures, if this is how either it's very difficult or it's easy or not to do the direct method. Not all items can be done, but I can say 90% can be done by the direct method. If you proper manage your coding for accounting. Let's say if you want to buy something, then you need to identify, okay, you're buying this material for what? For what product? For purchase. And then each material, for each product, you split out the bills or you split out the coding code, which is in the coding code, the item will be recognized as what project or what product. So that is the direct methods. So it's much more easier. More your IT advancement on ERP actually is helping a lot in terms of the transaction is done at the requisition until payments. So when you have the ERP in your organizations. are you using the software in your organizations on purchasing? Anyone? Just get to know your organizations. Have you paid? Have you using? If you want to raise the purchase something, you do manually or you do a computerized?
Yes.
You you use a computerized, huh? You use a software. What software that you are using?
No, no, no.
You use a manual, and then
Yes, yes,
by
no.
manual.
Yes, yes. What's
In company or in company, no, no,
Your company.
no, not use anything because about any procedures handle writing.
Okay. Okay, let's say you want to go to training or anything. Did you key in computer or you use a piece of papers, the forms?
We have some some procedure for system like material,
Mm-hmm.
and training until now in papers.
Okay, so have you using the ERP in your organizations?
ERP.
Enterprise risk planning, like you're using the SAP, for instance, so everything is get connected with one department to another departments. Have you used that in your organizations? Not sure.
And
Because
material,
in
yes, and material, yes.
not
When we
sure.
request the material, yes, we use this.
okay, so normally material they applied, but in the ERP, every department is using the same systems. So that is enterprise risk planning. So everything is integrated, which all the departments. So that if you say that only a material use, there is a we call like a single. They don't integrate it. They don't apply ERP, but they are using the tool for their own department. They are a standalone system. So which means that accounting they have their own system, material they have their own system. So everything have their own system. So if you have your own system, the migrated your data is quite difficult to another, because the data is sometimes need to be reconciled. So that's why the accountant will not rely data from the operation. So they rely data from the outsiders, from the vendors, because this cannot be matched. Then the financial is based on the data from the invoices and so forth. But if you are using the ERP, the data actually is come from the internals, and then you, as long as they can match, everything should be matching, then the payment can be done. Because when you raise the material requisition form, for instance, in the material departments, actually it's requested first. You request first, and then they're buying, and so when they buy before the request, they put the note that okay, this one they're keying the data. Okay, this is for project one, item one, blah blah blah. We need this one. This one for project two, and blah blah. So the coding will transit to the finance department. So finance department can match with the PO and invoices, and then they can list down all the details of the expenses based on project, regardless, because the system is already there. But if you do like a manuals, so you cannot do a direct method because it's very difficult. You cannot trace. Accountants don't want to trace a lot of transaction day to day, so they cannot trace that transactions. So it's very difficult. It's just like a bank. If the bank use manual, then we are suffer lah, because we want to update bank, and then bank suddenly another 1 days, and then our check is clear. So now everything is very fast. We are very transferable. So like in Malaysia, the thing is the most country in Malaysia, if you go anywhere, even in the small shop or even in the night market, you can see people can accept payment through QR code, is it?
Yes.
So it's being used widely now. Even you go to a hotel, even you go to island. In Malaysia, we can say that everyone is using the QR code. Even a small company also like micro company selling fried banana also they are using the QR code because this is a very common technology in Malaysia. So not even you can see even US or Canada they're not used get to use this kind of the technology. Yeah. But in Malaysia, it's a frequently used. Everyone is talking using WhatsApp. Regardless you are doctor, you are lecturer, or you are whatever position you are being connected to WhatsApp. So they respond very fast through WhatsApp. No need to go to the protocol. You can access information very fast. This is what happened in Malaysia, lah. But not all the company, not all the country, especially in Europe, stay more unconventional because we are more. I think we are more influenced by the technology from China, so that's why we are more advanced in terms of using the tools. There is a pro and con also lah. There is a pro and con. And then the safety also become very tougher and tougher in order to avoid this kind of situation. And then the step down method actually overhead are partly reassigned to the sub-department as the latter consume the particular amount of overhead in the proportion that have been decided before. So this is the being used frequently. Okay, so allocation method. This is broker method. So overhead are charged and reassigned or relocated by the per mechanism. So the amount of overhead reassigned reciprocate with or compensate of the overhead use. Today we want to start at what time? 12:30, yeah? Like yesterday, is that okay?
Yes, okay.
Okay, we try to start 12:30, we come back at 2:30, is it? And then we try to finish 5:30 or 6, huh? We try to finish this topic, but this topic is not, will be continued later on because you need to do an exercise. So the exercise is quite, I think it's taking time to explain. So I need another class also. The rest, I think, there's not much calculation. This is only the biggest part of the calculation lah, for these topics. So you need to know the step by step. I think the best way is we might be have another class for this Tuesday, is it? We have class this Tuesday, so I will show you how to calculate. We try to solve problem based on final exam. We can see from previous final exam for the last semester. We try to solve that kind of question. So either, and then we try to recall so that you can understand step by step how to solve those problems. Is it okay? So, okay, so the allocation method and the overhead that are charged can be directly allocated to the cost center with the two conditions. The cost center must have a cost, the overhead to incur. The exact amount of overhead must be known, sir. And then step in allocation or apportionment of overhead. First, you need to do the classification of your overhead. You need to collections amount of the overhead. What kind of expenses related with that kind of the product? Step 3, you distribute of overhead to production and service cost centers. Step 4 is redistribution of overhead from service cost center to product cost centers. And last step is to absorb of the overhead by the production unit. So your objective now, because you know how to calculate direct material, direct labor, the missing part is now is the overhead. Because sometimes I pay the bills, but I don't know how to apportion bill because bill can be used as anywhere, can be used to the warehouse, can be used to the office. That's why sometimes when talking about the bill, some of the big company they split out the bills, which is warehouse we have a different bills for office, we have a different bill. At least you have some portions that you can calculate is much more easier. But when we goes to the items, because the warehouse name, we not produce one item, now we produce many items. So we want to know each item, how much the cost per unit. So you cannot do a lump sum. That's why it becomes very complicated and complicated because you want to calculate those costs in detail. Let's say if you want to do training, yeah, and then you want to do training, how much the cost? So normally you pick up, okay, the accommodation, this one, this one, this one, okay, this is the training. But you never forget that your salary, part of your salary, not all, is also the cost of the overhead of the productions. Uh, Instead of you take, okay, the labor hour, we can find the instructor to, we can find the lecturers to pay. Okay, that is the direct labor. So what happened to your salaries? Because your salary is not meant for one particular project, one particular event. It could be many, it could be used for many tasks for one salary. So that is where you need to apportion, you need to absorb a certain cost that belong to the events. That is good when you do. That's why in audit firms, because when audit come to auditing, they are charging cost per unit. If we require longer time, if we invite them to come, then we need to pay all those costs because every each of people in the organization, we do not know the salary, but we have the rate for certain level that you need to pay. So based on hourly rate. Okay, so this is the type of assigning of overhead costs. We have two. One is the traditional costing method. One is the activity-based method. So at least before we understand what actually activity-based method is all about, we need to understand about the traditional costings, traditional costing methods. So the traditional costing methods actually start implementation compute overhead absorption rate. So you need to compute overhead absorption rate. Now you need to remember this. You don't taking care about the direct material, direct labor, direct expenses. That is direct. You can absorb all 100%. Now you need to concern about the overhead. So in order to compute the overhead, you need to absorb, you need to find out the absorption rate. How much the absorption rate? Normally, it assigns on the overhead. It focuses more on department rather than the activities. They don't see what you are doing. This is the traditional one. But what they see is that how much are you are being charged for the particular departments. So if that cost is using by the department, so everything goes to the departments. Because you don't see the activities. You just see about if you want to come up the events, all the costs belong to the department. So that is the cost of the department. You apportion the cost. So you don't split that cost. It's much more easier. Either the traditional costing method is still relevant or not for today. Yes, it's still relevant. It's still relevant. It's still considered as one of the method. But if you want to improve more, then you can use the activity-based costing. Because activity-based costing is much more accurate rather than traditional one, but the difference is not much. It's not much, but significant. It is not much, but very significant. It will impact your decision making in order to produce product A and product B when we do a comparison in the same department, in the same organization. So all manufacturing overhead costs will be assigned to product through the department. Cost center, direct costs can be directly allocated to the cost objective or product for a product, but not for overhead. So assigned overhead cost can be done using OAR, absorption or the absorption. So all these things done by the absorption rate, overhead absorption rate, overhead absorption rate. So direct material can be traced, direct labor can be traced, production overhead predetermined. Some you can trace, some you cannot, in order to identify the products. If your organization dedicated, okay, your salary is meant for product A. So easy, it's a direct. It's easy to absorb because but they say, oh, you have to do another job as well. So, which means the part of your job is not meant for that particular product. Okay, so overhead absorption rate, commonly based that are always used in the calculation of overhead OAR, overhead absorption rate is direct labor hours, direct labor cost, machine hour, unit product. So if you want to calculate those, normally they are using the direct labor hours or direct labor cost, machine hour, unit product. Most of the time, they're using the direct labels. Why the direct labels, either hour or cost? Why? Because you must remember this. Electricity, okay, you hire people 8 hours from 8 to from 9 to 5, from 9 to 5, let's say 8 hours. And then when the people start work, the machine is start running. Is it correct? And then when the machine is start running, the electricity also it should be open. So the electricity also running as well. The water being used because people start doing work. So the best absorption should be considered is direct labor. And maybe the machine hours or maybe unit produce. It will depend on the question. We'll ask you based on which one. If they don't mention, you don't mention based on what, please consider as a direct levels. Automatically it belongs to levels. But if they mention that they are absorbed based on machine hours, you just calculate based on machine hours. If they do not mention, just follow the rules that they're based on labor hour. Once the labor start work, everything start increase. Electricity increase, base increase, increase of usage, increase of value. So that is the best, the overhead absorption. So you must remember this, absorption overhead. So you don't say that I have to divide with what now? I have to calculate with what? If you don't say anything, you're just using the right labels, hours, because they're based on our X hours moving start operations. This is the rules. Okay, so the method of overhead absorptions, they're using the units produced, time basis, material cost, labor cost, and prime cost. And then the overhead absorptions, predetermining overhead absorption rate, budget production overhead, divide the budget amount of allocation basis. So this is for the predetermining, predetermining, which means that budgeted, we consider as budgeted. If we look into the absorption overhead, so predetermining overhead rates timed by the amount of allocation basis. Okay. Okay. So this is the one of the examples. Sihat Sandang Bahat manufactures a various component for internal use in product X. The following budget, see the following budget and the actual cost data relate to the production activity and overhead of the components. So the budget and the actual being listed down, either fixed, variable, direct labor hours. Okay, the company used an absorption costing system. They're mentioned here. They're using the activity absorption system and produce overhead are absorbed on the direct labor hour basis. Direct hour labor basis. So the question is, calculate the total overhead absorption in the production, shows the over and under absorption rate. Okay. So all the information is a production overhead. So in the production overhead, there is a fixed, there is a variables. And then there is also a direct labor hours. Then the company use the absorption costing rate and the production rate to absorb indirect labor hours. If they did not mention also, if the question did not mention, you need to use the direct labor hours. If they do not mention, but now that is the only information, and then they already mentions. Okay, so calculate the total overhead absorption rate in the production, shows the over and under absorptions overheads. Can you try to solve these problems?
No.
You know how to start with to solve these problems?
No.
Okay, you see these formulas. Predetermining overhead is absorption rate is budgeted production overhead, budgeted amount of allocated basis. So absorption rate, so which means that productions and allocations. And in order to get the absorptions overhead is predetermining overhead rates times by the amount of allocation basis. So the question asks you to calculate the total overhead absorptions in the production, shows over or under absorptions overhead. They ask you to calculate, and because the comparison is given, then you need to calculate those. You want to try first? So Abdullah, I think he's always no, I think it's server's problems, or maybe the computer got problems. He's always in and out from the. Where is my? It's very difficult for me to control this. Okay, you know how to start to answer this question, so you don't have any idea to start, or you're stuck. Huh? You want to try answer this simple question, or what? Or it's very difficult for you to start, or what?
No, not, not about difficult, but we tired 3 hours now.
Okay. Okay, you can okay, in order for you to the starting point of this question is you need to find the budgeted overhead absorption rate per direct labor hours. So the formula is budgeted variables. How to this one also I think I need to we cannot see anything from this one, so how do I write something on this one?
No.
Just now I can use this okay, I try to
Discussion in next after break.
we discuss this after break, huh?
Yes, yes, yes. I think maybe it took long
Okay.
time. Mhm.
Okay. Before this, okay, you can try, but I just want to explain that first you need to find OAR per direct labor hours, which means how much the OAR, and then you divide by the labor hours. After you got the OAR, the per unit, the very per unit labor hours, and then you can times by this total overhead absorbed in the productions. So you need to time by the actual direct labor hours, and you can absorb, you can get the actual total overhead incurred. So over the then you can get to know the either the under or over, because normally absorb minus dengan actuals, then we can get the uh, over or under. But I will explain one by one after the break. So we have a break first. If you want to try to answer this, then it's good lah. At least you try first. Wrong doesn't matter. Because we can do a lot of correction later on. Okay, see you by 2:30, is it?
Yes, okay.
Okay, so I close this one first.
Okay.
Actually, this video, like yesterday video, I did post it in Kalam. I transfer the videos
can share,
to.
can share on WhatsApp in Kalam. We can't use Kalam now. We can't use Kalam.
Yeah, I understood. But we try to ask coordinator, maybe ini. I already raised the concern already lah, because today the off day, so the IT cannot work for today lah. We pushed the complaint already, and we see tomorrow maybe you can access. So okay, I close this one first, and later on, because this one also is having some problem because I cannot transfer through normal VIA, so I transfer through view, so which is I cannot see you all. Unless I minimize, then I can see, but I cannot see the screen. Last time I can see both, but now I cannot see I can choose either I want to see the screen or I want to see the another things like the WhatsApp. So okay, see you by 2:30. If you got any question, please ask. I try to simplify my explanation so that you understand, but this I always assume that this is the minimum knowledge that you should gain for this course that can be applied to your job. Not for exam purpose only. It's good to have the accounting knowledge actually in your decisions. Okay, see you 2:30 today.
Okay. See you.
Okay, see you. Bye bye.
Bye.